Good morning, Money Map Press. I hope you just had a great time with the morning show, but right now we're going to be bringing in Tom Gentile. What happened in cryptocurrency yesterday? That question is going to be addressed inside of this next hour session, plus everything else that he typically talks about. So let's bring him in 5, 4, 3, 2.
Opening bell, power profit trades. Glad to see you here. It's Wednesday, December 15th, 2021. I'm still, excuse me, I still feel like I got a hairball in me today. For those of you that are interested in knowing, I do feel a little bit better today, so I am definitely excited about that. Got a lot to cover with you. You know, I was a crypto trillionaire, a multi-trillionaire yesterday at one point in the day. I imagine a lot of you who trade cryptocurrency, if you're using Coinbase or you were looking at coinmarketcap.com, you probably looking at this thing too for a moment and went, whoa, what just happened? And we started looking at coins, and coins had just gone absolutely ballistic. Now, somewhere down the line, I do expect a lot of that to actually become true. We'll get into it a little bit later. I want to show you guys my the front of my phone app. I took a snapshot of it just to show you what it looked like yesterday. And we'll get to that. I want to do the overall markets. I want to talk about overall markets. I want to talk about Fibonacci. I want to talk about what's been going on with the stock market for the last couple of days and how it bodes very, very well for a strategy that we're going to be covering today. I think it bodes very well for this particular strategy I want to show you. We'll get into what that strategy is, why I use it in my trading. It's a big part of my overall trading and investing plan, and why I think you should take a look at it too. All right. Of course, I'm going to talk about how you can follow me into battle if you want to know exactly what it is that I'm looking at every single day of the week when it comes to this high probability strategy. Right? I'm even going to give you access to the tools that I use to spot these trades. So all of that I have going on here as we head into the 9:30 to 10:30 show. Eric, good morning to you. What's happening?
Good morning, Tom. I mean, I was, I can't say I was a trillionaire yesterday, but I was up near the millionaire area at least. And I think what it was just a look into the future of how our accounts are going to look just in a couple of years from now in the crypto world. I don't know. It was crazy yesterday. I'm doing well, though.
Yeah, man, I tell you, I mean, that was one of those moments where you had to look at it a couple of times, and then you started thinking, if you really had that much money, I mean, you know, I was almost at Apple status in market cap. My account was almost Apple status. And I mean, we could talk about, we got to get into this later for sure. We look at cryptocurrency, and I'm going to show everybody what happened. But I tell you what, doesn't matter how sick you are. If you see some kind of a number like that, where all of a sudden you see so many zeros, I had to actually go back and count. And I'm like, wow, all of a sudden I feel a little bit better. But yeah, freaked me out too, Joe. And guys, glad to have you with me here. Those of you on the right-hand side of the screen, I'll be checking in with you from time to time, both here on Monday Morning Live and on the YouTube channel. Let's get right to it. So let's start off with what's going on with these overall markets. I want to switch gears for a minute. I want to look at a few things. And, you know, this is the part where we take a look at this and we start to see, you know, this is a 30-day chart I'm looking at right here on the screen. S&P. So I'm going to go through the overall markets, and then I'm going to go through the FANG stocks, because those are the most popular stocks. I want to see what they've been doing on almost on a day-to-day basis. And then I want to take it back a step, and I want to show you how I analyze it a little bit more objectively. So here's the S&P. And here's what happened. This is our Monday. So Friday, we had a nice top out here on Friday. Monday, we dropped from above 470. By Tuesday, we were down here near 460. And here we are today, kind of moving along around the 463 level. So not much movement yet, but get ready because we're expecting more volatility to come, especially coming up on Fed meeting. All right. If you look at the notes, I took a couple notes here that I want to cover this morning. Another Fed decision is coming out today. Is there going to be more taper talk that's going to happen in the markets? Maybe, maybe not. And of course, Elon talks Doge. We'll get into that. And of course, a lot of this, forget about the trillionaire status for a second, guys. A lot of what was talked about yesterday is being questioned. Is the selling overdone? Is the selling done or is it overdone? Or if you're like me, is it a little bit of all of the above? Okay, so this is all wrapped into what I want to start with today, and that was getting back to the S&P. S&P wants to go negative. I think what we're going to see is, when you take a look at everything, here's TLT. This is the bond market. Bond market's not really racing. I mean, we see the bond market up here at 155.12, and then we saw, this is December, we've seen the drop down in the 140s. What this means is that possibly we're going to see rate hikes. I actually expect rate hikes. I expect to see, my expectation is 2 rate hikes in 2022. 2 for 2022. And we'll see whether that actually transpires next year. But I do think that when we see an economy that is overheated as much as it is, and I'm not talking about jobs, and I'm not talking about wages, I'm talking about prices of goods and services going to the moon. All right. Everything from milk, eggs, bacon to housing prices. Lumber's back on the run again. I like I said, just looking at the activity around my house in New York, all of a sudden it's picked up again because we have that listed. We have our upstate house listed for sale. And I mean, it went from a lot to a little, and I haven't done anything lately with it. And all of a sudden we're starting to see, people coming out of the woodworks. So offers are coming in. All of this to me spells a very, very overheated goods and services market. And really one of the quickest ways to tamper that is to put on the brakes in terms of quantitative easing and possibly raise interest rates. I think we're going to see both. Okay, so that's the bond market. How about let's look at cash. All right. The dollar index, well, we did hit a high at 26 back in November. We did pull back down, but it looks like we're starting to cycle back up, which means that the best of the worst, that's the U.S., the best of the worst is still leading the pack, right? And what this means is it doesn't mean the dollar's getting stronger. It just means the dollar's getting stronger versus many of the other currencies out there. And then, of course, we look at USO. That is the oil market, right? USO is cooling off a bit. I mean, remember, we saw highs bigger, better than 56.5 on USO. We had a big pullback, took us down to 46 very quickly. A little bit of a rebound, but it looks like we're starting to tamp down again. And so I see USO coming back down around the 50 range. I do expect that to lower. Okay, so that is USO. How about GLD, the mystery metal? The mystery metal, which seems to catch everybody off guard. Just when you think it's going low again, it starts to move a little higher. And of course, this particular week, we're stabbing to the bottom again. Here you go. US dollar. If we get a firmer dollar, it's going to hurt gold regardless of whether the stock market's going up or down. I like this long term as an insurance policy. An insurance policy against what? Against the stock market, against cryptocurrency. Okay, but it is definitely out of favor with many investors. Probably one of the reasons I like it so much is because it's fallen out of favor. And I like to be, if you know me, I like to be on the other side of the sheeple. Okay, the sheeple go one way, I go the other way. Doesn't mean I'm going to be right all the time, but I find consistency being on the other side of the herd. All right, so let's just look at a couple of stocks real quick and see what's happening here. Meta Facebook, all right. Meta Facebook had a low back at the beginning of December. It's actually been going up since then. And Meta Facebook has been really quite interesting when we saw the sell-off in some of the other stocks in FANG. FB wasn't having much of it. In fact, what we saw drops in the morning followed by moves up in the afternoon. Yesterday, drop in the morning, move up in the afternoon. So far today, we're getting a little bit of a sell-off, but also so far today, we're inside. It's an inside bar. That means the high and the low are inside of the previous high and low. Now, whether that remains to be seen, we've got to go through about another 6+ hours to see whether or not that's going to hold or not, right? But Facebook, very tight. Apple, okay, the apple of everybody's eye fell apart. And that was on Monday where we hit a high. We hit a new high at 182.13, and then the crush came. The crush is back down in the mid-170s. Saw some follow through yesterday. However, Apple's catching some offers. All right, catching some bids. There's some folks here that are buying into Apple. And right now, Apple's up about 0.65% from yesterday's close. Amazon. Now we're going to get into some areas where we're seeing definitely selling. Amazon's high on the chart. This is just the last 30 days, guys. Last 30 days saw highs at 37.62. The lows were so far in the last 30 days. Yesterday, 33.28. We're at 33.53 right now for Amazon, down about 0.87, just off the first 10 to 15 minutes. Okay, Amazon is starting to perk up. I find it interesting that Amazon is going opposite of the typical move in Amazon during the holiday season. You see these blue trucks running around delivering packages. You see a lot of people just going online and buying their Christmas gifts this year, especially with the narrative we see. Certain mainstream media are reporting what's happening in the news and some are not. And you see these smash and grabs going on. Who says they're real? Who says, oh, that's not attributing to crime in my city? Anyway, what it tells me is that if I'm a Christmas shopper and typically I went out to look for merchandise in these cities, maybe I'm not going to go out. Maybe I'm going to buy my gifts online. How many of you in the room right now are ready for Christmas? Who's ready for Christmas right now? I can tell you, my wife had that conversation with me yesterday, and she is definitely NOT, ready for Christmas. Not, right? I'm kind of ready. Got the big stuff out of the way. But you know what I did? I'm like crypto newbie. I shopped online. All right? Shopped online. And the reason I'm asking this, YouTubers, tell me, are you ready for Christmas? And did you shop online or did you go out and buy your gifts? Most of the people I'm talking to shopped online. Nobody's going out and buying anymore like they used to. Right now, I ran out to downtown Sarasota a day or two ago, and I got to tell you, the traffic here, we've got that big convergence of the nor'easter. We get a nor'easter every year around this time, and the nor'easter we get is not the weather. It's the nor'easters coming south for the holidays. The nor'easters are here. Traffic is heavy. However, I don't know what kind of foot traffic is happening in the malls. Maybe I need to, get out of the car. Take a quick look. Down here in Florida, guys, let me ask you another quick question for those of you that are with me today. What do Florida malls all seem to have in common during the year? What is the mall mainly used for here in the state of Florida? Does anybody have an idea? Especially during the summer, what is the mall typically used for? If you know the answer to that, chime in and tell everybody else. I think I know the air conditioning. That's one of them. Dennis hit it. Walking, exercise, walking by seniors. That's right. It's typically an exercise. In fact, the malls are complaining about this, but yet they're putting arrows on the floors and they're putting mile markers on the floors. If they're complaining about it, why are they encouraging it? Anyway. All right, so Amazon is definitely, I think, taking advantage of the lack of foot traffic. All right, how about Netflix, NFLX? Let's take a quick peek and see what the 30-day chart looks like for Netflix. All right, so what's going on here? Why is this going down? This is typically something that goes up during the holidays. However, it really starts a little bit late. So I can't very well say this is a pattern. But well, we've got some patterns in Netflix that I was showing earlier in the week that's starting right now that we should see an upswing in this stock, because guess what? People start to binge watch, and they're going to start binge watching next week. And over the next 2 weeks, we're going to see binge watching go up, and I should expect to see subscriptions go up. And of course, Wall Street always is one step ahead of Main Street. So the pattern should be telling us right now this should be happening. Chris Johnson, get out of the way. We'll talk to you at 10:30.
Sorry about that. I had to bring in Chris for a second to remind everybody.
I didn't even think that was you, Eric.
Sorry, it was me.
We've seen enough bald heads here in the first part of this session. There's a reason I keep my hair. I want to differentiate myself from some of the crew here. Anyway, so Netflix. I'm expecting a turnaround there on Netflix. How about we take a look at Google, because that one has really gotten hit hard in the last couple of days. Take a look at what's happened. High in Google 3019. We really got close, and this is Thursday, Friday. Up there 2980, and then look what happened Friday. All right, and we saw that this is Friday. Look what happened Monday. Ba-boom, back down to near 2900. Look what happened Tuesday, down to 2820. All right, we did come back and make a close that was close to the open, but we were still below the previous day's low. Today, back down again, down 1% on Google at currently trading around 2849. Am I missing anybody? Yes, kind of. Not really a FANG stock, but everybody's been concluding it, and that is Tesla. And look at what Tesla is doing. Tesla, 1201 back on 1122 has been pretty much in a down move. We did see a move lower, higher, lower low, higher low, lower low. Is this the end so far before we get the next lower high? All right, we're seeing highs that are lower. We're seeing lows that are lower. Is this a turnaround for Tesla? At least to the downside? Well, obviously, we'll find out. Getting a little bit of relief today, but not much. And when we open lower, we got a little bit of buying that's come in so far, but really we're just above break even, trading around 960, 961. Now, let's take it back a bit. All right. When you take a look at what's going on in the markets, the next thing I want to do is I want to take it back and I want to look at Fibonacci ranges. So we're going to take ourselves back to the beginning of October. What was going on at the beginning of October? Well, other than the fact that my wife's birthday was coming up real soon, and I actually had to make that front and center, all right, or I would have got these. When I look at October, we also saw the lows coming in the first week of October. And so that is a good point at which we can look at Fibonacci. All right, Fibonacci ratio. So Fibonacci ratio, or what we look for is what's called Fibonacci retracements. All right, is when we take a low and a high on a chart, and based on that low to high, we look for pullbacks. Now, in a bullish market, which is what we're looking at right now for SPY, in a bullish market, I'm taking the most recent low and the most recent high, and then getting an idea of where these pullbacks are likely to go. Right now, notice what's happened here since the beginning of October. We had a low kick in down here around 426. We had a high kick in at 470. That high came. Look at this. This used to be the high right here. All right, we came over. We double topped. Now we started pulling back. I want to share with you for a moment. See the high that came in back at the end of November, and then we saw the pullback happen. We pulled all the way down to the 50% retracement. The 50% is if you take the low to the high and take 50% off of that move, you get a really nice area. 50% off is what I called it. All right, the rollback price for Walmart. That happened in SPY. Now, what typically happens after that is if we get that run up, we expect to see that continue. It did not. And now we're starting to roll over again. So how do we roll over and still keep a bull market? All right, how we roll over and still keep a bull market means this. If this were the 50% retracement, I am looking for this not to exceed that low. I'm looking for this to either come in or above the 50% retracement. So I am expecting, if we're going to come down again, that 450, that 449 to 454 area has to hold. Otherwise, if we go lower, now we've changed the whole look of the chart. This is one thing to look at, the overall SPY. All right. Next, let's take a look at the bond market. So I'm going to move forward and we're going to take a look at bonds. Let me cut in here real quick. Here's TLT. Now, TLT, I'm going to take a look at the same thing. Let's look at an 80-day chart and let's throw Fibonacci on there. Again, the low on TLT, you're going to see, was very close to the low for the stock market. So the low for bonds, stocks and bonds, are they moving together? Yes, they are. Because if we are going to raise interest rates on bonds, if there's going to be a tightening, it's going to affect the bond market, and bonds and stocks have decided to become friends. You know, they're brothers from another mother. One's in the stocks, one's in the fixed income. These brothers are moving together. And so what bonds do, stocks are going to follow, at least for now. So you can see here, you got that low to high, you got that pullback. That pullback did come in near the 50% retracement. But now the bond market's trying to capture some moves to the upside. If bonds can continue to do this, then I do see the stock market falling in line and getting a little bit of a rebound. USO, I'm not even going to look at cash. But USO, you can see here. Now, when you get a low, by the way, we have to go back further to actually find this low. But in the 30-day time frame, when you see a low to a high and you come right back down to a low, you don't even look at Fibonacci. It doesn't make sense. Moving on. Same thing with gold. You see a low. Now, in case with gold now, we see a low that came in at 161. We see a high that came in at 174. We've had a pullback and we've consolidated now. Now we're 1, 2, 3, almost triple bottoming right in this area of just below 165. The 164 and change area to about 165 half is an area that looks like a potential bottom. All right. So if that happens, maybe we'll get some move up in gold. By the way, is gold a seasonal? All right. Is gold a seasonal buy during this time of the year? It typically is. And that seasonality typically starts at the beginning of December. It doesn't start now because everybody's already been thinking about buying their jewelry in their Christmas their Christmas presents in terms of gold, platinum, silver, stainless steel. All right. Talking about you Rolex shoppers out there, okay? Not forks and knives. But you look at these precious metals, and I only rope stainless steel into the precious metal when you're attaching it to an expensive watch. But you can see here potentially some support that's happening in GLD. All right. Looking at Facebook again now, changing. Remember when we looked at Facebook a moment ago? And here it is. Let me put it back on the screen so everybody can see it. All right. And you saw this move down, but you also saw the subsequent move higher. Look over here. The all-time highs in Facebook were when they were announcing the metaverse. And you saw 382 become just 2 weeks ago. We went below 305 for a spell, for a hot minute, as they're calling it now. Now we're getting a rebound, but look what's going on. The rebound is testing the 38% upside retracement. This is very important because this is going to tell us, at least for Facebook Meta, whether or not we're truly in a downtrend. All right, let's move on. Let's take it back to Apple. Apple's totally in a melt up. You see that move to the upside. There's your Monday move. There's your Tuesday pullback. Where are we looking for pullbacks to? 164, 159, 154. That is the rollback prices. Really, that 159 to 164 area is where some support could kick in if we do continue to move backwards. Amazon. Well, Amazon's in trouble right now because its lows 30 days ago, down here around 3,200, and its highs at, 3,750, guys. And then we just had this big smash. And, Hulk smash that happened. It took us down to 61%. We ran back up, but now we're back below it again. And so you know what I see? You know what I see as support for Amazon? 3,200, 3,200, because that is the beginning. That is the beginning of this move. 31.89 is the beginning of the move for Amazon that started back in October. All right. Next, Netflix. Netflix does see that uptrend that started back in August. We have the pullback. Here's what's going on with Netflix. Same thing. We pulled back to 61.8. We bounced off of it. Now we've gone below it. So we could be seeing bad news for Netflix technically. Now, this may not happen tomorrow, but it could happen. We could get another bump to the upside and roll over. Again, the technicals are telling us that things don't look as good as they used to. Google, I gotta tell you, when you take a look at Google and you look at what's happened just in the last 30 days, it doesn't look good. Take a look at this chart. 30.19, and here we are, 28.42 right now, coming back down to these lows we saw back at the beginning of December. But when you take a look at the longer term chart, you see 26.73 on the low. There's that 3,000 high, and here's where we're rolling over to. But 28.34 is your fib retracement, and then 27.96 looks like the 61% retracement. So we could have a bad December to remember in Google, but the chart could still be intact. All right. So there you go. That is the FANG stocks, and that's looking at everything in terms of what we see for an overview. And I want to take a look at an overview: stocks, bonds, currencies, commodities, and then the FANG list, just to kind of take you through it. Let's change gears right now, everyone. And I want to talk about expensive and cheap options once again, because this brings me right into the next segment that I want to cover with you. Expensive and cheap options. What's cheap? What's expensive? I don't look at cheap options as something that has the least amount of money, okay? I used to do that early in my options career. I used to think that a penny option or a nickel option or a dime option was the cheapest. And then those options that were tens and even hundreds of dollars were expensive. But now that I've been in this business for decades, I look at things a little differently. I look at the stock itself and the near money options around it and where they go in relation to the stock, time, volatility, and a bunch of other things. And what I do is I measure the time value. And so sometimes in a stock, a time value can get very expensive because there's expectations in the future that stock is going to bounce one way or another, and it's pushing up the fear gauge. And then there's situations where that there's almost no fear in a stock, and the time value gets very cheap. Now, we record those cheap and expensive things, and you know what's great about that? We have the ability, and it doesn't work 100% of the time, but it works so much more often than not. We have the ability to find options that are cheap to buy and expensive to sell. I love buying cheap and I love selling expensive. Now, sometimes if I sell expensive, every once in a while, I'm going to get a little more expensive. I can't pick tops and bottoms. I'm not here to tell you that, okay? I'm not a top picker. I'm not a bottom picker. Every once in a while it happens, and we all pat ourselves on the back for it. But let me tell you something. You get that in your head too much, you're going to end up losing money, all right? I want to consistently make money. Consistently making money means I'm going to lose from time to time. Now, I want to show you a strategy that is a winner much more often than a loser, okay? And then I want to talk about what I do differently than the sheeple that do this, okay? So let's first get into what's cheap and expensive. Let's take a look at that today. So I'm going to pop on over to my tools, and I'm going to walk on over to an area that I like to call my morning report. Now, if you're new to the morning report, you can download the app to get this exact information. The app is at tomsoptiontools.com. You go to the Apple Store, you go to the Google Play Store, you can download that. I'm allowing everyone in the room here to download that app free, all right? Not going to cost you anything for a limited time. Then we're going to tack it onto something, but for right now, it's available free to everybody here at Monday Morning Live and YouTube. And again, tomsoptiontools.com. So once you download that, if you're a current user of our product, you can log in, username, password. If you're not, if you're brand new, go down the bottom and you'll see something called non-subscriber login. Fill that out. You get access to this tool. It's called the Morning Report. Okay. There are other little thumbnails of different apps we have in that suite. Those are premiums, but the Morning Report right now is free to everybody. Vicky's at the top. What's Vicky doing? Vicky's expensive. I didn't know Vicky was that expensive. All right. Vicky Properties. Vicky Properties doesn't look like an expensive stock because it's been dropping, but the options are getting very expensive. Next earnings are not for another 65 days. What's going on with this? Could be something with some news reports we're hearing that are pushing this out. All right. Let's take a look at Adobe. This is one that we all do know. Okay. And so here you go. Next earnings in 2 days, Adobe Systems. So Adobe kind of topped out here in the 680, just before 680 range. Earnings came out. You saw that big jump up and then that subsequent fall in option premium. Then we stayed low for a while. Isn't it interesting? Adobe broke out and got high again. And the option volatility, option premiums, all right, they climbed up a little bit, but they really started gaining steam when we crested and started to fall again. Now, what's causing option premiums to be above 50? When we were coming into earnings, the last time we came into earnings, this thing was trading around 35. Now we're above 50 and going up. Now, part of that is because the price dropped, right? We had a price drop from 660 on Monday to around 615, 614 on Tuesday. But here's the big thing. Watch the red mouse, everybody. See where I'm pointing that? I'm pointing at earnings in 2 days. 2 days. All right. As we get closer and closer to earnings, everybody wants to be in the big event. The big event is exciting. We're hearing about this right now. CNBC, Fox News, Bloomberg, and every other newsy type media outlet, social media, they're all talking about Adobe. And is Adobe going to be the tech stock that's going to bring them all back? All right. Whether it is or not, you got a lot of call buyers buying up on this thing because they're speculating that this stock is going to pop. You got a lot of put buyers speculating the stock's going to drop. But can you buy a put and still be bullish? Somebody tell me, can you buy a put in here? How many of you in here can buy a put to open and still be bullish? Seems like the only chatting going on in the room has to do with me making fun of CJ's hair. CJ and I make fun of each other all the time. We love each other, all right? And I think most of you in the room already know that, all right? So, I mean, what's the answer here, guys? Yes, 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 yes. How? How can you buy a put and be bullish? You could buy a straddle and you're delta neutral. You could buy a put spread. Tony says buy a put spread. But you know what? One of the ways you can buy a put and be bullish and only buy the put is if you already own the stock. Ha ha! Caught some of you. Some of you are like, I don't know. I don't know about that. All right. That's how you do it, folks. If you buy a put option, all right, you already own the stock, you've created a synthetic call. You've created a position that the put can only go down to zero, but the stock can keep going higher. Therefore, you have a position that still has unlimited upside, but limited downside risk. All right. So with Adobe, that could be happening. There could be there could be people buying insurance on the stock, the earnings, and all of this call buying, all this put buying are shoving up the price. Okay, so I want to talk a little bit about, and over here on the right-hand side, we've got all this cheap stuff, all right? We've got, if I come down here, 3D Systems has been on the cheap side for the last couple of days, and you can see it's still hanging out down here. So if you like 3D Systems to the upside, now's the time to buy the calls. If you like 3D Systems on the downside, now's the time to buy the puts. Do you know why? Well, let's see where they were 3 weeks ago. These things were trading up here at 115. All right, that's percentage of what they expect the stock to do over a certain time frame. Look at that, 115 has become 65. All right, that means that now the time premium is half of what it used to be. Looking at the same options, 7-day, 14, 30, 3 months, etc. All right, 149 days to expiration. On average, they are now half the price of what they were. Okay. I want to buy cheap. I want to sell expensive. Let's talk about selling expensive right now. So how do you sell expensive? Maybe you come in and you look at Adobe. We're going to come back and take a look at Adobe. But if you want to sell expensive like me, Eric, I've seen a couple people wanting to know, do we offer a service where I go in and sell expensive? Do we offer a service? I mean,
We
wow.
offer a service.
We do. It's called Rocket Wealth Initiative. Okay, Rocket Wealth Initiative, and I just brought it up on the screen. I actually am looking at my account. My account. So I'm not only a what's the hair club for men guy say? I'm not only the president, I'm a client as well. All right, I don't only teach this stuff. I'm a client as well. In fact, I'm a client in everything that I teach. But I don't only teach this and I have alerts, but I am a client as well in this particular strategy. All right, and the reason why is because it works. It works. Does it work 100% of the time? No. Has it worked 100% of the time this year? Yes. Closed positions. We haven't closed out a single loser this year. Got more winners. I got a loser or two happening right now in the open positions. All right, because guess what? We've had some blowback in the overall markets, but I got more winners than I do losers. And the reason why stems from the beginning of what it is that we're going to show you. All right, and what I want to show you is, well, let me show you first. There's that closed positions. This is the last 90 days. All right, just the last 90 days. 100%, 100%, 100%, 100%, 100%, 100%, 84, 83, 100, 100, 100, 100, 100, 100, 100, 100. Those are all what we're taking in on the trade. Okay? Now, what does this strategy do? And I'm going to get back to this in a moment. What does the strategy entail? Well, it entails something called statistical probabilities. Statistical probabilities are a coin flip. Okay, so guess what? I missed. I know, shame on me. Shame on me. I missed the Tampa Bay Buccaneer game this weekend. So I got to catch it last night on the NFL channel. So I got to catch it last night on the NFL replay, and I'm watching the Bucks playing the Bills, Bucks and Bills. And how many of you saw that game? Because it went into overtime. And I'm telling you, that game could have went either way as we were getting into the end of regulation. Did everybody see that? I mean, there was, it was the bad call. Bad calls are going to happen either way, but it really hurts when it happens close to the end of the game. All right. I know none of the ones in the first quarter, second quarter, third quarter even matter when you're in the 2-minute warning and a bad call happens. All right. The Bucks got bored and they gave up their lead. Here's the thing. At the end of regulation, captains came back on the field for another coin flip for the 10-minute overtime. Coin flip heads, tails. The Bucks called tails. The Bucks got it. They elected to receive. And that right there was telling me, man, the Bucks might lose this game. Well, we all know what ended up happening. It was Tom Brady threw a pass. I don't know how the guy managed to, A, catch the ball in all the traffic, B, get away from his defender, C, outrun his defender, which was faster than him because he turned around and kind of pushed him away as he was running, and then finally make it into the end zone. It was absolutely incredible play if you are a Bucks fan. Back to the coin flip. That coin flip could have gone either way too, because that's what a coin flip is. It's a 50-50 chance. All right. With options, it's a little bit more than a coin flip. When you buy a call option, when you buy a put option, do you realize you're no longer in the coin flip world? The coin's going to flip against you more often than with you, because you have to. It's kind of like in a kickoff. All right. If a team is kicking off to you, the receiving team, and you grab the ball on kickoff and you run it to the 50-yard line before you're tackled. All right. If that's one scenario that happens, and the other scenario is the kickoff happens and you're fooling around fumbling the ball, by the time you pick it up on the 5-yard line, you're tackled. Who has the higher probability of scoring a touchdown? The team that's at the 50-yard line to start, or the team that's at the 5-yard line to start? That's an easy question to answer. Obviously, it's the team at the 50-yard line. Okay. It's kind of like kicking field goals. You got a better chance of kicking a field goal when you're at your 20 or whether you're at their 20. Their 20, it's almost slim to none. Your 20, you've got a real good chance of kicking that thing through the uprights if that's what you do for a living. Think of options the same way. An in-the-money option has a higher probability of expiring in the money than an out-of-the-money option. We can use these probabilities. This is why I don't like buying out-of-the-money options. They have a lower probability of being profitable. I actually like to sell out-of-the-money options. Now, every once in a while, you'll find something that goes from out of the money to in the money pretty quick. All right, but if we're looking at statistics only, statistical probabilities tell us out of the money options are junk. In the money options are more quality options. And if you put them together, you can sell junk and buy quality and put some really interesting trades on. Now, I'm talking about junk for right now. I want to sell that junk. So I sell the junk by basically selling puts, and selling put options allow me to take payment on the junk, but at the same time, I'm doing it on first-class stocks. All right. I'm doing it on stocks that I would want to own at a later date in time if I'm put that stock. All right, let me give you an example. We talked about this one a couple weeks ago, NVIDIA. NVIDIA is not a junk stock. NVIDIA is a very high quality, first-class stock. When I think of NVIDIA, I think of gaming consoles. I think of visual or video cards. They are the video card king, right? And this might even be a bit of a play on Bitcoin, because a lot of these cards are used, a lot of their graphic cards are not used for that, but processors are, and they are in that business a little bit as well. But they are a king in their industry. And what I'm looking at is, can I buy the king for the price of a pawn, right? If NVIDIA is trading above 300, can I buy it for 235? Well, that's exactly what we did a couple weeks ago, because I showed you how this is done. I showed you how I work this, and I'm gaming this system with a game stock, with a gaming stock like NVIDIA. I want to buy this at a discounted price, but I want to get paid to do so. So what I'm doing is I'm selling the junk. So Ken, when you say, why do I want to own them? The junk I'm selling is that person who was buying put options at 235 because they think NVIDIA is going to crash. They have a different mindset than me. They have a lottery ticket version. This is like putting your money on a horse that has a 200-to-1 odds of crossing the finish line first, right? There's a reason why he's at 200-to-1 odds. It's probably headed for the glue factory, and more than likely is not going to finish the race first, but in a rare instance they do. If this is the this particular option is the glue factory of options, but I'm putting it on first-class stocks. So if I end up getting put this particular example, I'm happy to own NVIDIA at 235. Where's most of the money made? Sheldon says, where's most of the money made? It's made on the payout. But every once in a while, I might get that stock too. So take a look, for example, with NVIDIA. A couple weeks ago, we were looking at this, and this was a 235 put for $2.20. It had a December expiration date. All right, so let's take a look at NVIDIA. So I'm going to go forward a little bit with you. All right, NVDA. You can see here, NVIDIA has dropped. All right. It's not in the threes like it was a couple weeks ago. It's dropped off like everybody else. All right. That's interesting. But where's that NVIDIA put at? So .NVDA, okay. 21/12/31. That's the expiration date. P for put, 235. Hello. puts at $1.60. So even though that put was sold for $2.20, in fact, it was actually much higher the day that we were showing this. This was the previous day. Even though the stock's gone down, the put's gone down too. You know why? Because everybody knows it's junk, right? All the pros know it's junk. And I'm telling you, for the most part, who's buying this junk? The retail public, okay? The retail public, if you want to go against the retail public, you sell the junk to them. But how do you make sure you're not the one holding the bag on something that is, a stock that could be going down? All right, you buy first class. I do two things. I think I do two things very well. Number one, I'm selling junk for the highest amount of money. And two, I'm selling it on overall stocks that I like to call first class stocks. Now, what I do is I do that through some artificial intelligence, which is actually part of, guess what? Rocket Wealth. So what we do for our lifetime subscribers of Rocket Wealth is, Rocket Wealth, we have alerts that go out every single week. And like I said, I showed you guys, here's the last 90 days. This is indicative of what we've done for the year. But if I put the year up there, you'd never be able to see what it is we were doing. Last 90 days, you see we're selling puts, we're selling puts, we're selling puts. All of these are high-class stocks. And all of these have been profitable. But what we also do is, if you want to get more than that, if you're a lifetime trader with us, then you're able to get the sell puts software that comes along with this. This is the stuff that I look at every day. We'll look at this today, but I want to show you what we see. I'm going to take us back to November, all right? I want to take us back a month ago when we hit those highs. When we're hitting those highs near the end of November, because I'm always doing postmortems on stuff like this. So let's go over. Let's look at sell puts, and I set this back to the end of November. And as you can see here, here's what I have happening. These were our puts, our sell put stocks at the end of November. BBWI was on here. Okay, so what if I just click right here, BBWI, okay? And I can come in and I can see, you know what? I don't want to click that. I want to look at what's going on with the trade. All right, here's one. We could sell these puts and take in $233. All right, so that was a January 21st. So I'm not selling weeklies, all right? There's too much gamma in the weeklies. So what happens is there's too much noise in the overall market. I like to go out and look at those 30, 60, maybe even 90-day puts. All right, slows it down a little bit. Not making a day's pay. I'm making a month's pay. I'm making 2 months' pay. And then what I'm also doing is it's dripping in. So how's that doing now? All right, so go over here, click on latest. All right, so this is up. So of the $233, we've collected 95 so far. All right, on a per contract basis. All right, that's great. Let's go look at the next one. Next one's Tesla. Oh boy, we know Tesla was is below 1,000. This is where it was in November. All right, so this was a $29 payday right here. Let's take a look at it. So we're bringing in $2,900 on the payday. All right, a little bit of slippage on each side. Where's it at now? I mean, Tesla's dropped quite a bit. This must be a loser. Let's go look and see. No, it's not a loser. In fact, even with Tesla's drop, we've dropped in $672 of profit of the total in $2,960 that's going on. All right, let's take a look at another one. What's this? Xilinx? Okay, Xilinx. So I can come over here. I have a lot at my disposal, guys. When I'm looking at these, I can look at what's the pick. What's pick one on Xilinx look like? Well, that's the payout. The payout's getting more and more expensive. I like that. Me likey the payout. Next. What else do we have here? Probability cones. Okay, what does this tell me? This tells me where I want to look to be a buyer in case it drops. Now, what you're looking at here is the day that this trade's showing. Now, look at this. This is the future. This is now, folks. And look what's happening. Xilinx is staying in the blue cone. It went out of the blue cone, but it stayed in the red cone. It's staying inside the red cone. Do you know that what I like to do is when I'm looking at these and I'm vetting them, I'm looking for a put that's somewhere between the blue and the red cone. Gives me a 90% plus probability, statistical probability I'm going to make money. But what it's also doing is give me a great buying opportunity in the event that it does drop. What happened to Xilinx? Or it was Tesla. What happened to Xilinx? Well, you've got this $5.48 payout. What did it do? Let's go look at the latest on it. And again, oh wow, this one's nice too. It's brought in $164 of the potential 548. Now again, not 100%, but it has been very, very high. The probabilities have been very, very high. Our profits in Rocket Wealth have been very, very high. Again, this is Rocket Wealth Initiative. If you're interested in it, guys, you can find out more information. I think we had a phone number up on the screen. We've opened the service up again for a special price for a limited time. Check it out. And of course, if you got questions, we've got folks there that can help you answer those questions. All right. I did say I was going to look at sell puts. Let's look at sell puts today and just see some stocks that are out there. And again, I'm not going to vet through this. That's what I do with our Rocket Wealth folks. But if I go to the latest, let's bring this thing up to right now and all the criteria that I look at here. And then I'm running that. I can run this on any number of stocks, but I will just look at the S&P 500 to start. And you can see here, bang, I'm done. And then here you go. And this is what's looking really good right now is Tesla, Ford, Twitter, Lennar, and American Airlines. And there's a few others down there too. But these are all popping up as potentials. We're going to be vetting these, and I will have the next pick on this for those of you that are Rocket Wealth members. We're going to have a pick for you on. It might be one of these. We might see a change in the next couple days, but we'll have a pick for you on one of these trades coming up at the beginning of next week. And if you are a Rocket Wealth Initiative subscriber, join me and Jeff tomorrow, okay? Tomorrow at 1 p.m. as we're going to go into this week's trade. We're going to go into open positions. We're going to go into closed positions. And we're also going to talk about how you can take the elephant in the room. It's called margin, and reduce your margin on a trade that has the exact same probabilities, reducing your margin down to a $500 trade or a $1,000 trade, all right, without reducing, again, the statistical probability of being profitable. So there you go. All right. Wow. Let's talk about cryptocurrency. If you guys want to have some fun with how I ended up being a quadrillionaire for a little bit of time. Eric?
Yes, Tom.
How did things look for you?
I mean, yesterday was crazy. I got a message from a friend saying that everyone's a millionaire, a billionaire, a trillionaire. But at the end of the day, it was some glitch in the system. Nothing really happened. And, we all got excited about it because it was fun. But at the same time, you get nervous. But you mentioned earlier, what if you actually had that kind of money? And you and I talked about it. What if you had some offers out there, some really high offers out there? Would they have actually gotten filled? It's something kind of cool to think about.
Yeah. I mean, imagine if there was someone dumb enough well, first of all, there are folks out there that, I mean, we do have, there are stops. There are abilities to stop into the market. So in order for me to sell at those high levels, by the way, this is what I just clipped this out and, I erased the current balance, but take a look at this. Oof. I counted backwards. I go, okay, I know what the cents is. And that's 100. That's hundreds. All right. There's 1,000, 10,000, 100,000. There's a million. There's 10 million. There's 100 million. There's a billion. There's 10 billion. There's 100 billion. There's a trillion. $2.5 trillion. Now,
that's time to retire, Tom. You could sit back and not work anymore after that.
Yeah, you know what though? I really would get bored. I mean, yeah. You guys hear it all the time. You hear it on some of the promos we do and stuff. It's not. I could stop doing this. I could. I honestly could. Sometimes my wife asks me periodically, "Why don't you?" In fact, today I'm getting out of bed. She's saying, "How do you feel?" I said, "I'm still a little sweaty, but I feel better." She goes, "Let somebody else do it." I said, "Let somebody else do what?" She said, "Let somebody else do the show. Eric can do the show with somebody else." And
I don't know about if I could do the show, Tom,
said, but it's not me. It's not me. I like doing this. What am I going to do? Sweat in bed? No, I can sweat here in the chair as long as I don't have an IV propped up to me. And who knows? I was actually thinking about this too yesterday, Eric. I was thinking about, well, what if I was in the hospital in an IV? You know what I'd be doing? I'd be coming
Laptop.
to you live from this $1,200 calculator, otherwise known as my iPhone.
You totally could. You could trade from anywhere. I mean, your guys say it all the time. That's why we have broadcasts coming from Costa Rica.
I'm going to be broadcasting from somewhere doing something until I'm 6 feet under. It's just, what am I going to do? Yeah, I could buy New Zealand. I could buy, you know what I'd do when I buy New Zealand? First, I'd open that country up. I mean, they're fighting a losing battle. That's just my opinion. But, okay, we could go all over the place with that. But you know what? Let's spend the last few minutes talking about reality. So reality was that I did not have $2.5 trillion. But reality is I got a lot of skin in this game. I don't have that much skin. All right, we got to push these numbers back to the right a bit to get into my world. But you know what? Let's take a look and see what's going on, and and really kind of get a view of the landscape in crypto, because I think crypto is actually shaping up. Crypto is. I like to be on the other side of what everybody else is thinking, and to do that, when I take a look at where we were back in July, and then the highs where we jumped into that 67,000, and then we pull back. And we first hit, we hit 53, and it looked like 53 was going to be the hold. And then we came up, and you see this tick, 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 boom. And then here we did close above it, but then that's the 38% retracement. Well, we came through this, and we rocketed all the way down here, and then made this big move back up. We're talking about 44,000 to almost 49. There was about a $5,000 move back up off the low. That was a huge move that said, there was a lot of thin trades that happened right here. Now, since then, we've kind of been tangling back and above and below that $48,000 level. All right. So where are we now? Oh, let's pull it up and find out. I'm going to bring up one of my pro.coinbase account. Let's bring up the pro.coinbase account. And then let's take a look at BTC. And you can see here with Bitcoin. Back 46.9, so let's call it 47. So we're on the south side of 48. You know what's going on with Bitcoin right now? I mean, we were hitting almost 49,000, and this was at 3:30 this morning. But again, the market's rolling over right now, and Bitcoin is trading like an asset. It's trading like an asset, like a stock. Not that long ago, it was trading against the overall market. But, I was looking at yesterday, Ethereum was back close to 4,000 again. It wants to get into that range. And I think what we got to do is we got to see some big pushes up, followed by a couple of days where we don't retrace back. All right. Because right now, this is a search and destroy mission that's going on. The search and destroy mission is simply this. Cryptocurrency. All right. You guys all know Bitcoin and Ethereum there's really a couple of whales out there that are kind of controlling the movement. And it's a matter of who can handle the pain. And if you can't handle the pain in this business, you shouldn't even be in it. Right? I've seen a 7-figure number come off a haircut from my highs to lows. Seen it happen. All right. I expect it. I don't just see it, I expect it. All right. And yep, Chris will be coming up soon. I think Chris is rearing his head right now because he's telling me it's 10:30 and I got to go. We'll go in 100%. A minute. You hold on a second, Chris Johnson, if you please. But the thing is, though, guys, we're in an area right now where the pain threshold happens in this particular business. All right, I'm here for more than pain. I see the landscape of this from I call it the 30 to 40,000 foot view. And the 30 to 40,000 foot view showed me back in July that there was more to be seen. And I believe there is much more to be seen than this. I do believe we're in the third wave of cryptocurrency. And the third wave is the most volatile wave, especially if you guys are into Elliott wave theory. Wave 3 is always the most violent wave. I think that's what we're in right now. There's a fundamental wave. There is a technical wave. Hold on. I think you're going to be glad that you did. I know that's what I'm looking forward to. So, hey, that's it for me for the day. That's it for me for the week. Join us later today. Jay Harris is coming in on behalf of Tom's Trading Room, and he is going to be doing some order placing, which is going to be diving into that. So those of you that are part of our premium subscribers, where you're having Coach Jay come in and going to show you some stuff. We're going to get into Rocket Wealth in much more detail tomorrow. So those of you that are Rocket Wealth subscribers, all right, definitely take advantage of that. If you want to be a Rocket Wealth subscriber, right there, guys, 877-212-9163. They'll tell you all about it. I'll see you again next week. Bye, everybody.